Well, good evening, all. Ira Epstein, and here we are with your Spider ETF stock market wrap-up. And what a crazy day it was for this Thursday, the 20th of February, 2025. And, this is 30 days in now. January 20th was if you remember, the inauguration. Here you are 30 days later. And how did the markets do? Well, interest rates have fallen. The dollar's pulled back. You have to look at the stock market. Some of the indices are up. Some of the indices doing what? We'll take a look at this all in a minute. But today, the market was disappointment day. It all started out early this morning when Walmart's numbers came out. And because Walmart has been just doing so phenomenal, traders, if you get a misstep, they get nuts in the head. And the other part they look at is who do they cater to? And it's basically everybody. It used to be, obviously, the lower end, and then it became middle class, and now you'll even find the way up class. Everybody shops at Walmart. Food business is big, apparel's big, electronics are big. They're everything to everybody. And there's no question they trade at a high premium. They're, 37 almost, the PE ratio? I mean, it's high by any standard. So the market, any misstep sets things off, and traders extrapolate, and they go, oh man, this is it. The consumer, he's not going to be able to do anything, and where do you go with it? That's what happened today. We're going to cover that in a minute here. As you can see, you were down in all the stock indices. Tesla was down 6. NVDA held up very nicely. Boeing gave back a chunk today, but I've been expecting that, along the line here. That would be good. I was very impressed when the CEO said that Elon Musk has thrown his weight into Boeing to help get the presidential jet, Air Force One. There's 2 versions of it, built, and get rid of these delays that's costing Boeing a fortune because they have a fixed price contract. And, whether he's just kowtowing to Musk or not, he said they're really learning a lot from him. But do remember, Musk also has SpaceX, so he knows a thing or two about this. Bonds got a bid today. We're getting close to that Amazon where anywhere from here on, I wouldn't be surprised if the market tries to bottom out. I still want to see Netflix ideally, the word is ideally, a bit down. Home Depot beaten up over the past few days. Not enough to do an awful lot there. So let's take a look, if we could, at what's going on. First, we have the S&P Global Group. They're going to release their preliminary February manufacturing and service sector PMIs. That comes out at 8:45. Existing home sales for January, that's going to be released by the National Association of Realtors, and that's going to come out at 9. University of Michigan, the final February consumer sentiment number at 9 o'clock. Mortgage rates again decreased. This is the 5th week in a row. They're hovering near 7%, and they've only been moving about 20 basis points overall. So what you have there is a marketplace that is stable. That's the only word that we can use at this point. You'd really like to get into the 6s. That's going to be where you start attracting some more people. Obviously, anything in the low 6s really might do the job, but we'll see. Now, when we take a look at Walmart, they had a 5% increase in revenue. That's not bad. They had an almost 10% lift in the operating profit for its fiscal year. I don't think that's so bad for January 31st. In the final holiday quarter, same-store sales went up 4.6%. Does any of this look bad yet? For the coming year, the forecast earnings per share was $2.50 to $2.60. That's what was bad. So they came in at $2.77, and the market went bonkers and said, that's it. The consumer's tapped out. They can't buy anything. We've been waiting for this. Their credit cards are unloaded. We're seeing delinquency on autos. Home payment delinquencies are shooting up, blah, blah. Okay. We know what the headwinds were. They were exchange rates, and they were the integration of Vizio bought by them. That supposedly was it. All right. But according to Walmart, these items are what the company is now expecting. Operating income to increase by 5%, better than, on average, 5 to 7%, better than the 4 to 6% growth it originally outlined. This is now the forward guidance. The company raised its annual dividend by 13%. So if you want me to think that a company that's saying they're going to make more money, their income's going to go up, and they're declaring a dividend, and there's a problem, I don't come from that school of thought, and that's going to be the problem that we all have and that we all face. So those are the things. In simple English, I am not panicked by what Walmart did. It finished the day down nearly $7 lower. Okay, market's correct. If you don't get that, you get PEs of 100, 37, 25, and that they're high relative to where they've been, you don't belong in this game. But then you can't play the game because when you go up in bull markets like that, that's what PEs do. When the market's over and when a big correction happens, we will go back into more norms. I don't think you're there yet, in plain English is what I'm saying. When we look at Palo Alto Networks, you can see how the market's had a 2-day correction. That's nice. We haven't had a trend trade. Remember, I'd mentioned that each day. What you've had is a lower low and a higher high. That doesn't bother me at this point. I've said that I think the support's going to be the 18-day average of closes. That doesn't mean it's yet a buy, but it certainly means that I think I'm onto something, and we'll see if tomorrow, if you can reach down $5, I think that's a big ask. I could be wrong. Maybe everything I just said to lead you up to this, I'm wrong, and the market just falls apart tomorrow. I don't think it will. When we take a look at why the market backed off, each time you've hit the Bollinger Band, you've backed off. And when we look at momentum, are you embedded? No, the market is not embedded. So markets that aren't embedded, let's go back and take a look. Let's not count Thursday. The day before, both numbers were over 80. The day before, both numbers were over 80. And the day before, even before that, they weren't. So you had 3 days in a row, they were embedded. The only time you can re-embed is the day after you lose it. So if you were sharply higher tomorrow and you get rid of this, you don't have to get to this number at that point. You could reestablish the bull trend. That's the point I'm making. If it doesn't re-embed, then the odds do favor that price and the 18-day average may well come together here. Now, that moving average you can look at, it's moving in the neighborhood of about $1 to 70 cents a day if you take a look at how the red line, and I'll do that one more time for you. See how backing it off? 191.54, 190.39, so $1.15, 191.54 to 192.53, about $1, and that brings you in here. Got what I'm saying? So tomorrow you're probably going to be closer to the 194, just over that level, and we'll see if the market reaches for that or if it turns itself around and re-embeds. It'll be one of the two down the road is what I'm expecting to happen. In Dutch Brothers, I'm still liking what I'm seeing in the company. Again, a market that is working on embedding. Both numbers over 80. Whoops. Come on, back one more. Yeah. Over 80 and back on Friday. So you're embedded. And embedded means this. If you lose the reading and it stays lost, price and the 18-day average, in my theory, make a run at each other until you take out the highest high. If they stay embedded, breaks like this are the buy until the embedded reading is lost. Take my enhanced Bollinger Band course on our website, IraEpstein.com. I tie it together with momentum and the Bollinger Band itself, and I think it gets very interesting. CrowdStrike, another one of the markets that could lose its embedded reading, but the whole goal was just hit. You went today to 421.18. That's all I'm looking for. That does not mean you can't go lower. It doesn't mean you can't go down here. The uptrend ended in the sense that you hit the 18-day average and you broke the higher high, lower low. However, without losing the embedded reading, it could start again on you right now. So the boys that play this game, that's the word I'll call them, and it could be boys and girls, so ladies don't get mad at me, it could be both. I think that they end up buying that. They look at the number and they go, I will be out if it gets under 79 on a close. Otherwise, I want to hang in there and see, did I just steal the market? That's what I think happens. Rivian, I saw the CEO today. He was on with Kramer. He's just got great things to say about the company. They can't wait to get their second line of the new car coming out. They made $7,000 a car. They had a profitable quarter. And I mean that, okay? A lot of people love it. You know, I'm a car guy, so I read how the magazines are. I read an article today, as I took a few minutes for myself, about a 40,000 miles in 2 years in a Rivian, what it was like, the cost of it, and so on. All they had to do was say great things about it. Every electric car has its own quirks. Understand that. Then we come to KWEB. Higher lows, higher highs. It didn't even know today there was a break going on in the stock market, but it is paying attention to the upper band. And again, you have that embedded reading. Lose these readings, and I think we go back down. Keep them like you are. This was just a hiccup, and that's all that it was. Toll Brothers didn't collapse today. Notice how it too is just sitting on that Bollinger Band. It's got a bearish, not bullish embedded reading. I see no reason that I want to own it yet. We have more housing numbers coming out. I can't imagine they're good, but we'll find out. Tesla, I'm not seeing a trend trade here. You got a higher high and lower low. I would expect that if it drops to 341 level, still going to be an attempt at support. But with the market under the 18-day average, I have downside bias. You got to be over that for me to have bullish bias. When we look at the financial services, they fell back. But we have been warned. I have certainly warned you here. And one of the things I pointed out each day, I said, look at how you've narrowed in these bands. I run from that type of setup. And you'll say, why? Because you're going to say, oh, it's going to break out. And I say, you're going to get chopped up. My experience, that's all I can tell you, is when you get a pattern like that, what typically happens is you hit the bands, and on a sideways action, it's not uncommon to throw back. The guys that thought it was going to break out, they get caught. You come down to the lower band. It doesn't go anywhere. It's a mishmash, and I run from those type of events in the market. XLI fell back today to the lower Bollinger Band, stepped out of its uptrend. It had an uptrend until today. But once you took out this low back here, that was what you didn't want to take out. Once you did, you stepped out of the trend. That doesn't mean you're in a downtrend now. It just means you have nothing going on the daily chart. The weekly chart is a little different. We'll cover the weekly charts tomorrow. On the energies, I was watching Carter Worth today on CNBC, and he is absolutely in love with XLE. He thinks this is dramatically undervalued. I can't argue that. I've been saying you're going sideways. The question is, which way will it break out? I don't know that yet. What he's done is he's drawing a line here. He's drawing an uptrend line and thinking that it's a rising wedge, which will force the market out. It just might be. You're overbought. My work, you don't buy Bollinger Bands. The trend is up. Whatever it does, I'll be happy to jump in when it tells me. In the gold market, I'm a little concerned that you didn't get more buying in gold today. We saw everything falling around it, and you know it's one of these markets that runs to the up. I wouldn't want to see it really back off much under today's low without maybe you take a little bit off the table. I realize everybody's talking gold, $3,000. I get it. That's terrific. I said it in December that I thought this year we would get there. I never thought I'd be talking about it February 20th that we're $30 away or so from it. But you are. But I'm also watching. It's embedded. I sometimes use that to lighten up if the market doesn't do something. So I don't want to see this market back off, not under today's low. Let's say if it gets under yesterday's low. And from that, maybe it's just time you lighten your position up. Keep a core position till you lose maybe the embedded reading. You do what you want. I just tell you ideas, what I think the pros may or may not do here. In SLV, higher lows, higher highs. And by the way, in my paid subscriber is where I say, this is what I want you to do. And I haven't told anybody yet to do what I just said in the gold market. Okay, I'll share that. Might tomorrow, but not yet. Overbought, not one of my favorites. Yes, it's in an uptrend. Yes, it's going up, but the chart pattern's not as good as I would like to see. In the copper, we broke down, and we broke down low enough today to get to the 18-day average, and in the process, you went through this break low. So now you have a higher high and lower low. Isn't it sort of neat how the first challenge, and we talked about that here, I said, I think the pros are coming out. I said it the first day you got up to it. I said it again yesterday. And boom, right down to the 18-day average and away you go. Every now and then a broken clock is right twice a day. You know that. So come on. BND, higher lows, higher highs. Again, I see sideways action. Just like the XLE was, I see this market churning away. I can make two arguments. It keeps going, doesn't take out yesterday's low, gets to the upper band. It takes out yesterday's low tomorrow and falls back to the 7202 area. The trend is up right now. The bulls have it, but I hate this sideways action. I don't mind sharing that with you. In the dollar, have you taken a look at my dollar report? I put it out for you yesterday. Take a look at the numbers I thought we were going down to, and now you take a look at what's going on right here. Ta-da! What we were talking about could be taking place right at this minute, and that's great. You know, I want to be right, not wrong, obviously. FXE, I'd be very cautious here. I think the market's going to have trouble at the upper Bollinger Bands. It's extended. Doesn't even have to reach it. But if it does, between the upper band and the 100-day average, I see resistance. Not a place to suddenly jump in and do one thing one way or the other. So as you know, I keep saying, hey, take a look at the currency report I put out because I cover price counts in it. I show you two versions, the one that we did 3 weeks ago, the upside count, and a current downside count that's at work. Then I'm going to walk you into the seasonals on a 5, a 15, a 30-year, a 50-year patterns. I'll give you the idea what they're doing. I'll walk you into the futures, and I'll walk you into UUP so you get to see how it looks if you're an ETF trader or futures. So how do you get this? You just go to IraEpstein.com. Got it? It's really simple. IraEpstein.com. Look on the top left. It's right there in bright green. There's an icon I'll put up here, and you can click that and look at it that way as well. I'm Ira. You have yourself a great evening. I'll catch up with everybody tomorrow, and I hope it's as exciting tomorrow as it was today. And it was an exciting day. I enjoyed it. You have a great day.